So hello everybody, good evening, welcome to Office Agenda 247. Today in this particular video we will be talking about unit number 24th. This particular session is one of the part of your target series. We are targeting all the 4 subjects of JAIIB via this particular series. So if you have missed any of the videos, any of the sessions in the previous days, it is highly recommended to you can say again go to that particular session and watch it right away after you have watched this session. Okay, so when we talk about IFS, today we'll be starting with unit number 24th, which pertains to microfinance institutions. What is the role of microfinance in our country, microfinance sector, how it has evolved over a period of time, and what do we mean by Grameen Bank model? All these things we will be looking into this particular session. So let's get started. When I talk about a basic introduction of microfinance, you must know that what do we mean by microfinance. But before jumping on to the formal definition, let's have a brief discussion about microfinance. We have the commercial banks with us. We also have some NBFCs, some private money lenders are also there in the economy. Then why do we need such institutions which are providing small amount of loans, very micro amount of loan, not even small, micro amount. When we talk about the credit profile, you will categorize them into micro loans. The reason is very simple. Not only that, the private money lenders, they exploit the customers by levying more, or you can say higher rate of interest, charging them with huge rate of interest, I would say. But for those people who are not having any kind of credit accessibility, small amount of credit will also help them. That is the first reason why microfinance. Second most important reason is the rate of interest which is being charged by these MFIs, microfinance institutions. It is relatively lower as compared to the commercial banks. Reason, because the government wants to improve the living standard of our you can say underprivileged people, the citizens who are underprivileged, or for that matter they are living in a backward area. These two reasons clubbed together, from here the need, or you can say the want of microcredit will arise, microfinance will arise. Second question which comes in our mind, that whether the microfinance institutions, they are providing credit only. Answer is again no. They are here for providing the deposit services, the savings services, along with that credit, plus some pension services also, plus they also have a particular domain where you will be offered some miscellaneous services like the saving module of a particular derivative. So when I talk about all these wide array of services clubbed together for a smaller amount, smallest amount with a nominal amount of rate of interest, will provide us with the microfinance. So when we talk about this particular definition which is there in the book, that what do we mean by microfinance? It is a financial service which provides small loans, financial services to poor and low income households. Again, the people, the individuals, they are residing in backward areas. They are not having the accessibility to credit. Even if they are having the accessibility, the rate of interest which is being charged by the money lenders, it is huge. So we want these people to come out of poverty. That is the core aim, and have a good or decent lifestyle. Next, it helps in financial inclusion, which enables the poor and low income households to come out of poverty, increase their income level and improve the living standards. Fine. So next, when we talk about the wide array of services which we were just discussing, not only includes the savings, credit, but also includes the insurance, so micro insurance and micro pensions as well. All these 4 clubbed together will come under the domain of microfinance. Next, when we talk about the genesis of microfinance sector in our country, the development happened in majorly 4 phases. Back in 1970s, the need, the want for microcredit arose in the country because the agricultural sector was reeling under stress, industrial sector was in doldrums, services sector was almost non-existent. So government thought that let's try to resurrect the small scale industries and try to provide loan to those people who want to start their small businesses, micro jobs they want to do. So in effect, from 1974, with the establishment of Shri Mahila Seva Sahakari Bank, we saw a genesis in the microfinance sector for our country. So 1974, Shri Mahila Seva Sahakari Bank was established to provide financial services to women in the unorganized sector. And this particular bank is treated as the foundation, as the keystone of our MFI development in the country. Next, in 1984, NABARD advocated self-help group linkage as a tool for poverty alleviation. See, NABARD has always supported the SHG model. Since 1984, back then NABARD was having the particular role in RBI only, fine, because one of the part of RBI was agri credit back then. So from that time only, NABARD gave a particular emphasis on the SHG, and in 1984 it was finally done by the NABARD using the SBLP, the self-help group bank linkage program. Upcoming years in 1910s for MFIs or the microfinance sector in our country. What was the reason? There were 2 reasons again. First, that the government was more keen to take our country out of the poverty, because poverty was surrounding every sector, every segment of society. We were reeling under huge inflation, the inflation levels were high, investment was not there, ultimately leading to economic reforms of 91. And from 91 till 2000, you will find n number of financial activities going on thanks to the investment from the foreign investors. And somewhere down the line, the idea of microfinance took a backstage. But again, it was resurrected in the change period as we know it between 2002 and 2006. You will find specific reference for the secured and unsecured loans. Whenever we have a particular case in the bank pertaining to microfinance, one thing is for sure, either it will be backed by the subsidies or it will be an unsecured loan, fine. So in 2002, norms for unsecured lending to SHGs were aligned with other secured loans. So whatever practices were followed for those secured loans back in 2002 were replicated for the SHGs as well, even when it was an unsecured one. But the landmark event of this phase was 2004, where RBI recognized the microfinance sector as one of the priority sector. And with the categorization as a priority sector, what happened? The priority of the commercial banks shifted towards the MF, that is microfinance. So when I talk about RBI included microfinance within the priority sector in 2004, recognizing MFIs as tool for financial inclusion. Financial inclusion, again a very important topic. In PPB also you will find its reference, in IFS also, in the later chapters of module A when we talk about poverty, issues faced by Indian economy. So there you must know what do we mean by financial inclusion, and you can add this point there also in your notes, that 2004 RBI, the major aim of recognizing microfinance as a priority sector by the RBI was to alleviate the poverty and provide financial inclusion. In 2006, the nail in the coffin as we know it, fine, for the microfinance institutions, because from 2000 till 2005, this sector was reeling under huge corruption. Everybody who was involved, maximum, I would say, not everybody, maximum stakeholders who were involved in the microfinance sector, they were having corrupt practices, and that forced the government to shut down certain branches as well of certain MFIs, microfinance institutions. So, allegations of high interest rate, unethical recovery practices led the government to shut down some branches of the MFIs in 2006. But in the third phase, we will see the growth, fine, growth as well as crisis. Started off with the growth story, ultimately culminating into a crisis, fine. That's a very interesting one, but yeah, that's true. In 2007, you will find private equity players entered the market, leading to rapid growth in the microfinance institution loan book. So, when we talk about the economic reforms, as we were just discussing, that investment happened, huge volume of investment were inflowing in the country. And similar was the case for the microfinance institutions also. There also you found numerous private equity players, and they supported the sector back then with 35 billion rupees. That was the approximate number, but yes. In 2009, you will find that MFIN was established. Now, what is this MFIN? Microfinance Institutions Network. It was formed and it allowed the NBFCs, the non-banking financial companies, to become the member. Fine. So, NBFCs also chipped in this particular sector. They also started functioning, operational activities started from NBFC side also. Next, again in 2010, it will be facing crisis as it faced in the previous phase. So, the Andhra crisis unfolded involving coercive debt collection practices that led to borrower suicides. Public awareness, the lack of public awareness which must be provided by the financial institutions was termed as one of the major reasons of these suicides. The government issued an ordinance that significantly again curbed the MFI activities, again closing certain branches. Fine. So, started off with the growth 2007, ultimately in 2010 you will have the crisis. Next, consolidation and maturity 2012 till 2015. When I talk about the consolidation, it means that you try to define the functioning of a particular financial institution. Here it is the microfinance institutions. So, in 2012, Malegaon committee, the most important committee for the MFIs, it recommended certain changes and RBI implemented the new regulations. Why? Because of the crisis here as well as the previous crisis, where exorbitant rate of interest was levied. So, RBI had to intervene in 2012 and try to regulate the lending practices for the microfinance sector. 2014, RBI issued universal banking license to Bandhan Bank. So, 2014 is a landmark in itself for the Bandhan Bank, the largest micro lender. MFIN was recognized as a self-regulatory organization as well. So, ultimately when we talk about MFIN, it is what? Self-regulatory organization, so that you can easily promote the lending activities, the services which are provided under the insurance sector, pension sector and the deposits for the microfinance. The latest, or you can say the most important right now, which most of the bankers are also knowing, was formation of your Mudra Bank in 2015. So, this particular event ultimately led, or we can say it was termed as a flag bearer of the microfinance sector, that the establishment has been done in India, but the growth story of the microfinance sector will be started when we are implementing the Mudra scheme, the Pradhan Mantri Mudra Yojana. There were 3 categories of loan: Shishu, Kishore and Tarun. Right now we have 4. What is the 4th category? Do let me know in the comment section. Fine, I want everyone who is watching this session to comment in the comment section what is the fourth category or who is the latest entrant in case of Pradhan Mantri Mudra Yojana, and what is the amount of maximum loan which can be offered under the Mudra Yojana. Fine. So now let's have a brief discussion about the Grameen Bank model. In this particular model, you will find 2 or 3 good references, good examples that how lending activities should be popularized, how they must be done. Although this model is not from our country, fine, the Grameen Bank model is not from India but from Bangladesh. Fine, Bangladesh also one of the developing nation. Back in 1970s, from 1970s only, concrete year will be 1976, but from 1970s only the story will start. One major scholar of Bangladesh, Mr. Yunus, he will see that there are n number of villages in the vicinity where he was living, the Jobra village, where private money lenders were charging exorbitant amount from those people who are already underprivileged. They are unable to meet their day-to-day expenses. That is why they have taken loan from the private money lenders, and in return what they are getting? Exploitation. Money obviously they got, but along with that the complementary thing was exploitation because of the high rate of interest. So Mr. Yunus thought that let's try to lower down the baggage of these people, and he started to lend certain amount of money to 40 odd houses, and that too without any rate of interest. Ultimately, he found out that such kind of collaboration between the lender and the person who is seeking the credit will ultimately lead to greater benefit for the society and will serve the purpose, will eradicate the poverty. Because ultimately in the backward areas, when we talk about the microfinance sector also, what is the major aim? It is to curb the poverty, to raise the living standard of the people who are underprivileged. Fine. So when we talk about the theory, how it works, the global pioneer of microfinance sector was Professor Muhammad Yunus, who experimented with the concept in 1976 and established the Grameen Bank in 1983 in Jobra village, Bangladesh. And for this particular Grameen Bank model, he was also awarded with the Nobel Prize. That is why he is known as a Nobel laureate. Fine, in 2006. He was surprised to know that people were not able to manage even 5 takas, approximately 22 cents when we talk about the US currency, to buy the raw materials, and that local money lenders charge 10% per week and more, and this would make them poorer. Leave aside the renunciation of their income level, in fact it is depleting. He lent 856 takas to 42 people of the village, told them to repay without interest. This emotional support was institutionalized by establishing the Grameen Bank. And when we talk about today's Bangladesh, so right now the Grameen Bank model, it has about 2600 branches and has 9 million borrowers with repayment rate of over 99%. So the loyalty of the customers was high thanks to the emotional support which was lent by Mr. Yunus. In this model, the members of the group are also the owners of the bank. So ownership is also being resurrected by Professor Yunus, and he was the opinion that if we instill the management in the lending practices, and the management comprises of those people who actually require certain amount of credit, then the payment failure can be curbed to a certain amount. Fine. So the group, normally it used to consist of 5 members, and fine, and the SHGs, specifically when we talk about the specific scheme of NABARD. Okay, so this was it from my side. I hope that now you know that how you can approach this unit. What is the basic of microfinance we have discussed. Now it's up to you whether you want to read from the book and do self study, or you were very, you can say, relieved after attending the session and you want to cover the entire session, the entire chapter, in fact the entire subject with us. Then just go to the website, that is Adda 247. There we have freshly launched the officers batch for all of you. You can apply a coupon code, that is Y1003, for your purchases to get the maximum discount and reap the benefit of early bird discount. Okay, so this was it for today's class. We'll meet in the next session. Till then, goodbye everybody.